Hello everyone. Welcome back into my YouTube channel. And in today's video, I'll be explaining to you about the most important concepts that you need for you to develop a very good strategy. And you just need these four concepts to actually develop a very good strategy. Okay. So the first thing that you need is market structure. The second thing is liquidity. The third thing is imbalance. And the fourth thing is PD arrays or point of interest. You can call them demand and supply zone depending on what kind of strategy you are using. Okay, but according to ICT, we call them PD arrays. They can be order blocks, they can be breakers, they can be mitigation blocks. Okay, so let us start with market structure. So what exactly is market structure? Market structure is simply the movement of price up and down and also in a ranging. Okay, so let us check on how we can easily understand about market structure. But if you want actually learn about the full tutorial when it comes to market structures about YouTube channel, so you can check them. So let me just simplify about market structure. So in market structure, we have an consolidating chart. We tend to form higher highs and lows, as you can see here. So in order for us to say we are in a bullish market structure, we have to see price breaking these previous highs and forming new highs. Okay, so price tends to break previous high highs and form new high highs when we are in a bullish market structure. And this issue of breaking the previous high highs and forming new high highs is what we call break of structure. Okay, or simply B or S. Okay, so we form break of structure whenever we break previous high highs and form new higher highs. And this continues as long as we keep on breaking higher highs and forming new higher highs. But also remember, when we form higher highs, higher low, the new higher low. So remember previous high highs and forming new higher highs. But also we don't break the previous higher lows. Okay, so we keep on respecting higher lows, but we keep purchase. Okay, so that's how it is easy to mark break of structures when you're trying to understand about market structures. Okay, so price will keep, but also price will keep on respecting higher lows. About the bullish market structure. Okay, when we actually reach at a certain level, price will actually change in the trend. We cannot actually continue being bullish all the time. It will reach a stage where price will change direction. And when we change direction, it can either be a consolidation or price actually create a downtrend. You can as a consolidation market structure. In this type of market structure, which is consolidation, we are mostly advised to actually skip it and wait for a market to show us an expansion from that consolidation. It can be an expansion to the upside, which is an uptrend, or it can be an expansion to the downside, which will form a downtrend. Like what you can see here, after forming, where we spot a change in the trend is always what we call market structure shift, like what we saw here, to form a new lower low. And that's where we mark as our market structure shift level. Whenever price starts to change direction, we mark that region which was broken by price as a market structure shift. Okay, so this is market structure shift at low highs in price action. Okay, and when we continue in the same direction, breaks lower lows and forming lower highs. And the lower lows are always, and any new lower lows that will be formed, any lower high that will be formed will be lower than the previous lower. Okay, so market structure from a bullish what you can trend, we are advised to look for buys, and on the downtrend, what, for example, and with creating that market is liquidity and significant low. That's another example of liquidity. Another example of liquidity can be a trend line. A trend line is also one of the types of what liquidity. We call it trend line liquidity. Okay, so remember that we can either have equal highs and equal lows. We can also have swing highs or significant highs and significant lows. Okay, and this kind. So we don't, or we are not always advised to trade on these kind of trend lines. Okay, not advised to trade on trend lines. Okay, because the market at 10 point, the market will break this trend line and it can go in any direction. It can either continue going down, or after just sweeping this trend line, the market can go sweeping the trend line and then going higher down. It's not advised to trade. So it's also part in a significant high or what we call swing highs and swing lows, depending on the direction of the market. Okay. Now we have talked about liquidity. What's the other thing? The gaps which are formed by inefficiencies. We don't see a balance between buyers and sellers. So we look for areas where we can find gaps, expect price to move into those imbalances and fill those imbalances before higher direction. Okay. So that's with either discount arrays or point of interest, or other people may call them demand and supply zone. Okay. Things. We need to actually have this full understanding about these concepts, which are market structure, liquidity, and imbalance. Okay. And I always advise you guys to actually make sure you simplify your strategy. Don't complicate your strategy. And that's the only way where you can actually have the best or the high probability setup in price action. Okay. That's very important for you. So make sure you focus on these four things: market structure, liquidity, imbalance, and PD arrays. Okay. Make sure you focus. No, like it's very important to understand these four concepts. The market structure is going to help us to know the direction. Okay. Liquidity is going to help us to understand areas where we can expect fake outs or fake zones, or we can say status sweeps or liquidity sweep. The imbalance is going to help us to know like price is going to create a retracement or a pullback and fill that imbalance. And last three, the PD arrays or point of interest, are going to help us to know where we are going to take entries. Now I think you know why these four concepts are very important. You need first to understand about the direction of the market, which is through the market structure. Then you need to understand about fake areas or turtle soups or areas where you can expect liquidity sweep, which is the issue of liquidity. And the third thing is to understand where price is most likely to be attracted or magnetized, which is imbalances. Okay. And the fourth thing is to know where you are actually going to take entries, which is the PD arrays or point of interest or demand and supply zone or order blocks, or they can be breakers and mitigation blocks. Okay. So this is why these four things are very important. Now let us go and check an example on how we can use these four concepts to actually have a best or a very high probability setup, and how we can actually use these four concepts to create a very good win rate in our strategy. Okay. Now let's check on the charts. So guys, now let us check on the charts on how we can use those four concepts to have a very nice trading system. Okay. So this is Euro USD 15 minutes time frame. And I always use 15 minutes for my execution or entries, but also sometimes I use the 1 hour time frame. Those are the best time frame that I actually see beautiful trades or beautiful setups. So guys, now let us remember what we just discussed, which is about the four concepts. The very important thing, the first was market structure, and now we use the market structure to understand the direction of buyers. Now we need to go on the higher time frame and actually check the direction of buyers on the higher time frame. Then when we know the direction of buyers from the higher time frame, we will now know if we are looking for a bullish market structure or an uptrend, or if we are in a downtrend, or if we are in a consolidating market. But mostly on the higher time frame, we just consider the issue of uptrends and downtrends. So if we know we are bullish on the higher time frame, we expect the market to keep forming higher highs and higher lows, and also we expect to look for buys. But if we are in a bearish market or a downtrend, we expect price to keep forming lower lows and lower highs, and we'll only look for sales. Okay. So now let's check on the monthly time frame. I always use monthly, weekly, and daily time frame as my higher time frames. But sometimes I can also use the 4 hour time frame to look for a direction of buyers if the monthly, the weekly, and the daily are still contradicting or giving me some lack of strong directional buyers. Okay, so it's very important to understand that. Now let's check on the monthly, weekly, and the daily to actually try to master if we are bullish or in a bearish market structure. So now let's take on the time frame. Okay. frame, and also the weeks. This area down here was just like a resistance area, okay, where price was actually bouncing here, and we saw like some sort of a consolidating market here. But this is the issue of which a monthly direction, or in the next month, or where the next candle will be, and this small imbalance there, which was visited. This is on bearish place, and the weekly months at a certain time we can expect some sort of bullishness. But now let's check on the weekly if it's okay. From this price actually disrespected this very sharp at weekly time of this just focus time frame up to 15 minutes time frame. And now we know the monthly is bearish, the weekly is bullish. Now let's finalize with the daily going to end on the order block imbalance. Now this gives us an indication like the market is going to be bullish, okay, although we are just forming this bearish candle here, okay. So we like know in this daily time frame we can expect some sort of bullishness order block. And even if we are still confused, we can check on the 4-hour to actually complete this direction of bias analysis, like the higher time. How do we actually understand about the directional bias? So you can see on the following looking on how to shift. This was the market structure shift. Market structure shift on the 4-hour time frame. On the 4-hour time frame. Okay, some sort of continuation. They actually the area we are here. This whole area. This is now a what? Consolidation. What do we do? And just liquidity. You expect it sweeping this liquidity, find more confirmation about this. So on the 1-hour time frame, let us check if we can find a nice movement to the upside, if you can find some sort of imbalances, and if we can just draw the best bullish order block from this area. Now order block, using my order block, order here down here, strong is on the 1-hour time frame level into order block as a what? Bullish. This going to sweep this into interest or this demand zone, okay. And also we know we are coming from this consolidation here, okay. So you can see how nice it is. Another thing that you can use is to understand the concept. Previous point I'm not going to teach about this area as a point of interest. Also here structure of liquidity sweep area here. You can see how price swept that, and how we can clearly use this. See how price revisited again this zone, and how price kept going higher. So that's how you can clearly or simply use this area, which today I'm just going to show you how we can use market structure, liquidity, imbalance, and concepts to actually develop a very profitable strategy. Okay. So on the 4-hour, we had this side liquidity area where price is most likely to visit this area before we can actually see another push to the upside. So now what we do, we wait for price to tap into this bullish order block. Okay. And also, if you look closely, we had this order block down here. Like this one was already mitigated. This bullish order block down here was already mitigated. Same to this order block here, which was also already just order blocks. And so my expectation is that this is going to be a high quality order block or a price setup, because we are also having this sort of what bullish order block here, which is coming from this other previous mitigated order swept before we tap into this. So this is a high setup, high probability setup. Now I can execute on this 1 hour, or I can actually wait for price on the 15 time frames. Look for area now on 1 hour is my area of interest or point of interest, and wait for price to tap into that before I can look for buys. There we are. So the market is already moving up. Okay, the market is already just happened. So let me replay it again from here. Okay, from here it has replay it again. So not any drawdown here. Price swept that inducement level, which was a fake order block. This one here acted as a liquidity area. This move was formation of some fair value gaps in this movement, and or pull back into our beautiful. So here you can just go into 15 minutes and look for another confirmation entry to execute on the 15 minutes. Okay. So now you know, like we have already used the concept of imbalances can be observed even on how price was forming this impassive move to the upside, and this was okay. So now let's check on the 15 time frames, and the 15 time frame is moving higher. discounted order block or discounted array. This can wait for price to come there and targeting any drawn liquidity, which is any previous high. Okay. Sorry. So this is 15 minutes that we are going to look for another entry on the 15 minutes after we have just mitigated what? So I've mitigated the 1 hour bullish order block. Okay. So let's check on the 15 minutes time frame on how we can easily look for another entry. Call it confirmation entry. There we are. So looking on how price is moving very fast here, it's not easy for price because here we started forming higher highs and higher lows. So we started from this high high, high low, high high. You see now price is trying to move from this region. But looking at this region, what do you see here? Here, what we see again, control entry. So you can see here, this is some sort of consolidation there, right? So look for a nice break of structure to the upside. Here we have it, break of structure. So break of structure, clearly you can see we formed some sort of consolidation here. So you can expect the price to, and this is going to act as our liquidity area, this zone here. So let's see our price. Let's see. Yes, nice of it, very nice. And you can see after tapping into this bullish order block, wishing again in the same time frame. Okay, price did what? Price created this liquidity sweep. Order block. What next? Created this market structure shift here. More market to this order block. Tapping this 15 order blocks, 15 minutes order block, and there we are. Okay, now it's pushing this retracement here because we keep on respecting order blocks. We respected this order block, now we respected this order block. So I can way how price respected the other order blocks down there when we are actually order blocks. Now I can expect the same thing to happen on the 15 minutes. So I expect to see price to be a high probability setup on about 16 pips. Let us see our target here. You can either target this high because this is started executing. So that's where we can target. You can target that as a TP area. That's become 1 to 4. Okay. And expect the price to tap into this. Okay, tap into this order block and execute there. Okay, now what did we form here? Very beautiful. We form the liquidity area. You can see how we keep on forming these beautiful structures, concepts. You can see how market is actually forming the concepts. You can see when it comes to imbalances, we have the imbalances. Like here, we had a very big imbalance there. So price keeps on following all our criteria, which would act as a inducement area or liquidity area. You can see we have formed that imbalance there. So I'm expecting price to come down, sweep this bullish order block, and keep going higher. That's my expectation. And this becomes also a high probability setup on the 15 minutes. So let's take it. Yeah, I started forming some sort of consolidation now. Again, forming the same I talked about liquidities. You can see here we form again consolidation, which is the form of liquidity also. Again, here. On the 1 hour, we also formed some sort of consolidation, if I'm not mistaken. So you can clearly see how price is constantly concepts that I actually explained from the beginning. Now we are actually sure like the market is going to sweep this. So anybody will become liquidity here. If you use this, you become liquidity because this is not very strong. We didn't take this. And you can see below it, below this zone, we have a mitigated order block. So you expect to see that level become a high probability order block price to actually respect that order block because it's a very high probability. And there, see some sort of in the trade, you can see some sort of drawdowns there. Now you see price is trying to form. Let us see if we reach our target. But I'm expecting to see high prices. I'm expecting to see price pushing higher. Let's see this fast. Have a sort of consolidation there now. So if you could use this as your first target, I think this as your first TP, then you are already, first TP has been hit. You can see it's already hit, but if you wait for price to reach into this level here, getting higher prices, then you can see very beautiful push to the market has followed those 4 concepts steps to develop a very profitable strategy. So guys, I think this was educational. Thank you for our time. And if you have watched this video till the end, don't forget to subscribe. Don't forget to like, comment, and share this video to other people so that they may actually learn from this video, because I actually believe these 4 concepts are very important, and this is what you only need. You don't need to use indicators. You don't need to use a lot of concepts. You don't need to combine a lot of concepts. You just need these 4 concepts to develop a profitable strategy. So guys, don't forget to subscribe. Don't forget to subscribe. Hit that bell icon, like this video, comment, and share this video. Thank you so much for your time.